Hi, my name is Sarath. Second become B. My topic is capital market intermediaries. Meaning of intermediaries: frame or person who acts as a mediator on a link between parties to a business deal, investment decision, notification, etc. In money market, for example, banks act as intermediaries between depositors seeing interest income and brokers seeing debt capital. Intermediaries usually specialize in specific areas and service as a conduit for market and other types of information, also called a middleman. See also intermediation. Intermediaries are service providers in the market, including stockbrokers, sub-brokers, financiers, merchant banks, underwriters, depository participants, register and transfer agents. Stockbrokers: a stockbroker is a regulated professional individual usually associated with a brokerage firm or broker-dealer who buys and sells stocks and other securities for both retail and institutional clients through a stock exchange or over the counter in return for a fee or commission. Stockbrokers are known by numbers professional designations depending on the license they hold, the type of securities they sell, or the service they provide. Financiers is a person or a business entity who makes their money from investment, typically involving large sums of money and usually involving private equity and venture capital, leveraged buyers, corporate finance, investment banking, and or large-scale asset management. Merchant banks: a merchant bank is a financial institution that provides capital to companies in the form of share ownership instead of loans. A merchant bank also provides advisory on corporate merchants to the firm they lend to. Underwriters: a company or other entity that administrates the public issues and distribution of securities from a corporation or other issuing body. An underwriter works closely with the issuing body to determine the of offering price of the securities, buys them from the issuer and sells them to investors via the underwriter distribution network. Depository participant: depository system introduced in India in the year 1996. In India, a depository participant is distributed as an agent of the depository. They are they are the intermediaries between the depository and the investors. The relationship between the made between the two under the Depositories Act. Service provided: determination, retailization, transfer of securities, statement of traders. In India, register and transfer agencies. Register are the trust or institution that register and maintain detailed records of the transaction of investors of the converse of mutual funds house. Register or transfer agents are the trust or institutions that register and maintain detailed records of the transaction of investors for the converse of mutual fund house. Mutual funds: a mutual fund is a type of professionally managed collective invest that pools money from may invest to purchase securities. While there is no legal definition of the term mutual funds, it is must commonly applied only to house collective investment vehicles that are regulated and sold to the general public. Venture capital. Venture capital is financial capital provided to early stock, high potential, high risk, growth start-up companies. The venture capital funds make money by owning equity in the companies it invests in. The typical venture capital investment after the seed funding round as the first round of institutional capital to fund growth in the interest of generating a return that an relations event such as an IPO or trade sale of the company. Portfolio manager. A portfolio manager is ideally a person who makes investment decisions using money other people have placed under his or her control, or a person who manages a financial institution's asset and liability. On the investment slide, they work with a team of analyzing and researchers and are ultimately responsibility of establishing an investment storage credit research agency, a financial professional who has expertise in evaluating the credit worthiness of individual and business. Credit analysis determine the likelihood that a borrower will be able to meet financial obligations up and pay back a loan, often by reviewing the borrower's financial history and determining whether market conditions will be conducive the repayment. Thank you.